After months of volatility driven by conflict in the Middle East, some analysts predict that oil prices will keep dropping. Thanks for joining us. I'm Daniel Marin in for Will Dupree. Now we begin with Jay Young, the founder and CEO of Dallas-based King Operating Corporation. Now Citi is forecasting that Brent Crude oil, Jay, which is a type of light oil that comes from the North Sea, it could fall to about $60 a barrel by the end of this year. What's driving that prediction, and do you agree with that forecast?
Well, I agree with it right now, but not long term. I believe that our supply is been hampered so much. I mean, I know that people overseas have seen their oil being shut off, or drones, or attacks, and the Strait of Hormuz and all these Persian Gulf. There's just been so much supply knocked off the market that if this is short term, which I believe it is, I mean, the reason why price of oil goes up or down is because of supply and demand, right? I mean, if there's more supply on the market, less demand, I mean, we're going to see prices move. Same thing with what's going on right now. And you have so much supply that's been knocked off the market with the war that we're going to see a shortage. We have to see a shortage. I mean, we're drained our reserves in the United States, you know, the lowest since the 80s. There's been a lot of rigs taken off the market because there's been so much oversupply before the war. I was talking about before the war, there's going to be a shortage of oil come summertime or end of the year, and that was before the war. Now, with the war, I still feel like there's going to be a shortage, and we're going to be in for some higher prices. I mean, I'm not talking about, you know, $100 or $150 or anything crazy, but it's just we're going to see a cycle moving itself in where today you are seeing, you know, prices starting to come down into the 60s. I just don't think it's going to last for very long.
So you mentioned that there were some factors that you thought might lead to it before the war. What were those factors that you were watching already?
Yeah, mostly rig count. You know, we watch rig count closely, and if the rigs are taken off the market and there's not enough, you know, rigs that are drilling for oil in the United States, which they were down a lot before in January, February, because when the shale boom comes around, I mean, they need $60, $70, $80 a barrel. And prices got down to $55 a barrel on mid-December. So they're like, wait a minute, let's don't do this for fun or lose money. They take those rigs off the market. And when that happens, you're going to see a shortage of supply that's going to be 3 to 6 months down the road. And when you have a shortage, I'm a fourth generation guy. I've just been around the oil business for a long time. And when you see cycles over and over and over again, and you see what's going to happen, it's going to happen. And so I thought that before the war. Now with the war and all the disruption, no telling what's going to happen.
And if they continue to drop the oil prices, what kind of effects could consumers, the people at home, what could they see besides maybe the obvious ones like gas prices? How could they see the effects?
Yeah, well, I mean, 42% of a barrel of oil goes to gasoline. That's all, 42%. There's 6,000, 7,000 other products that are needed for oil. I mean, plastics or your phone case, your tires on your car. There's just so many different products all around me right now that need oil that you're going to see prices come down. You know, transportation for food. You know, big reasons why you see inflation is because you see food prices go up because the transportation costs go up or down. And we're going to see prices coming down right now. That's a good thing. I'm afraid this is more politically motivated right now with Trump and what's going on. I saw the same thing back in Biden. Remember Biden? I mean, Biden took all this oil out of the markets, or took all the oil out of the strategic reserves during the elections, and it's just politically motivating. And I don't, you know, I like the idea of you know, if we're producing more barrels of oil and the demand continues to increase, because hey, I mean, as long as the population increases, we're going to use oil. And the more we use oil in the United States, the bigger the demand is. And I don't see demand coming down any. I don't see peak oil demand where you have demand that hit its peak and it's going to start moving the other way. We haven't seen that, and I don't know if we'll ever see that or if I'll see that in my lifetime.
Right. All right, we're going to have to leave it there for now. Jay Young of King Operating Corporation, thanks so much for joining us.
Thanks, Daniel. Appreciate it. You have a great 4th.
You as well.